Welcome to Charts Today. My name is David Linton. That's the chart right there. US bond yields just rocketing. We're at 1.44%, moving into long-term trend. And this is potentially tectonic for markets if we see this keep going. We've got to go as high as 3% really on the yield to break the 20-year run in bond prices and putting them into a new downtrend, and that will be highly significant. But we're seeing all these targets being met. We've got a new target to 163, 150 has been there for a while, 163, 174, 154, 153. We've had targets. We've been talking about these for quite a while now in charts today, so really significant. Remembering this is my weekly, my daily, and my 60-minute chart, my long-term, medium-term, and short-term view of the market. But bond yields, that's the really big story, and you're going to hear more and more about it as we just keep running higher and higher. So it's really significant, this move from 0.5% to 1.5%. Long-term interest rates have effectively tripled over the last year. Having said that, of course, they've spent years coming right the way down. So we're going to fight now resistance points all the way back up. Anyway, starting to look at the dollar, seeing the dollar looking weaker still, pushing all the while lower. So people have been calling the bottom in the dollar. It's not clear yet that we're at a bottom. We're bearish on all three time frames, and we've got a downside target now short term for another 2% lower. So we are seeing the dollar just sinking. Looking at the euro, we're looking stronger against that weaker dollar. We're at 122 this morning, so we're broken higher there. We found support on the daily cloud. And if we take a look at the Japanese yen, we've broken the 106 level now. So the yen is looking even weaker. So that's really significant. A dollar buys 106 yen. So it's quite significant, the changes we're seeing going on in currencies. Sterling sitting at 141.60, holding on to its gains against the dollar, looking very strong there. Highest level since Brexit, really, since the vote. So that's 4-year highs. Looking at against the euro, we're just sitting at 116 this morning. But again, sterling looking strong on that vaccination data. Bitcoin sitting at 49,000, did recover a little bit yesterday, still short-term bearish. No big downside targets, but for the moment, we are seeing the long-term chart still looking good. And of course, we do have this very big upside target in place. We've now got a downside target. That will be very significant if we break that, and we've effectively go back to 35,000 if we move below the low that we just set the last few days. So that'll be significant. But the 60-minute charts will show that up. And of course, if you're trading Bitcoin, keep an eye on the 1-minute charts. Looking at the S&P 500 now, we were up 1% yesterday, so market's looking strong again. Futures this morning are down very slightly. The E-mini is down, and we're seeing the Nasdaq future down 0.4%. So tech is not performing as well, still in bear mode there on the short-term chart. If you look at the cash market for the Nasdaq, it is still also in bear mode as well. So we're seeing a little bit of rotation going on. Tech stocks not in favor at the moment. The broader market doing better. The VIX volatility is up slightly this morning, but did pull back to negative territory. So market's taking all these changes in its stride. We're looking at the FTSE future this morning up 0.26%. So looking set on this consolidation pattern. We're still a long way from the high that we saw a year ago. The DAX in Germany has broken that high that we saw a year ago. And of course, we're seeing here that we're just holding on to that gains. And again, taking the virus statistics very much in stride in Europe. And the CAC 40 is really now just on the verge of turning long-term bullish. Not making new highs yet, but we are seeing a break out of this consolidation pattern. Tokyo was up 1.2%. Holding on to the long-term trends, and the medium and short-term trends still bullish as well. We've been making 30-year highs in Japan, remember. The Hang Seng was up 1.2%, having had a big fall the previous day, found support on the cloud, and Chinese stocks, which have really looked very bullish this year so far, with that break out of the consolidation pattern, recovering up 0.5%. Sensex in India was up 1%, so Asia recovering pretty much across the board. And the Aussie market up nearly 1%, just edging higher from this consolidation phase. Gold sitting at 1790, back through the $1,800 mark, but holding on to the short-term uptrend. We found that support on the 1764 level, so that's quite key. Silver, we still need to break the $30 mark to really run on silver, but we are seeing here we are bullish on all three time frames. And copper is edging ever higher. This is a real proxy for Chinese demand, really. So we are seeing that really moving much higher. As we mentioned, we've seen the bond yields just pushing higher. These charts looking very strong. Looking at the 30-year yield, we're up 2.5% there. So we're up, really moving higher, up 2.5% to 2.3%, and we're really starting to enter this long-term bull territory. The monthly charts, I did post on LinkedIn yesterday on the German bond. The monthly charts are going to be key. And if we look at that German bond chart, we still have to break the levels that we saw previously, really to start seeing this trend breaking. But we are seeing prices already breaking down. So that's really significant for the market. Taking a look at the energy mix now, we've got Brent crude pushing ever higher. We've got a target of $70. And on the 1-minute chart, if you're trading crude oil, these charts are absolutely critical. 68.80, 69.10, and 71 breaking higher. We were neutral crude this week, but now that we've broken these levels, it's looking short-term bullish. The interesting thing on crude is if you look at the longer-term trends, there's no real targets. Look at the 1% chart, there's no real targets there. If we take a look at the weekly cloud chart, we are just seeing signs of pushing through there on the weekly cloud. So that is looking a little bit better. But what's interesting is that we are hitting levels at 70 where there's pretty strong resistance, and it could be that we trade between these ranges now, 45-70. And then if you look at the monthly chart, this just highlights, not many people look at monthly charts, but this just highlights how crude oil is really in long-term decline. We've really been in this downtrend on crude going on years. Not many people are looking at that, but the reality is we're probably hitting some significant long-term resistance levels soon. That's not calling a top, that's just saying we need to be aware that we're running into those levels, and of course we're not above the cloud here. So it will be interesting to see. It'll take months. It'll be interesting to see whether crude oil can break those patterns. So that's just something to look at when you're looking at the charts. WTI looking very strong as well, of course. We're seeing this is all very heavily driven by storage numbers pulling down. And I recommend you watch Brent Verdich's oil weekly reports, Blackline Capital. Again, I share that on my LinkedIn posts. We're seeing US nat gas sitting at $2.84, but we've still got downside targets. We are just struggling here. We've been bearish on gas this week, and that's where we're headed. Looking at coal, we are stronger this morning. Coal's actually seen a bit of a reversal this week. We're at 1%. Demand kicking in. We've got upside targets now, 72.2 and 71.60. The coal is now looking more bullish than it was at the start of the week. Emissions, not much change this morning, but we are recovering back into bullish territory. We saw the short-term downside targets on emissions, but these longer-term targets are going to play their hand, so we're looking strong again there. Looking at gas markets, we were bearish on gas this week, still bearish. MVP lower, breaking the lower trend there. And if we look at TTF, we see here we're down 0.25% this morning. Anything below 17 euros on TTF front month at the moment is not great. And if we look at the seasonal contract, we're down here as well, breaking lower, basically breaking out of this trend. And we're seeing gas seasonality playing its hand at the moment, so weaker gas prices. German power looking a bit stronger this morning. We're at 53 euros, so we've broken that level and putting us back into bullish mode. The targets are not that exciting, but at least we are seeing a recovery there. And if we look at Nordic power, we aren't yet back above the cloud there on the Cal contract, so looking a bit weaker there. That's it for today. Keep an eye on those charts. Until tomorrow, happy charting. See you then.